Hello friends, I hope you are doing well. It's been a while since I didn't post a YouTube video, and as I explained in the comment section, I was working pretty hard during this season on the restaurant with my girlfriend. So that's why I didn't find the time to record the videos, but I still had many ideas and plans for the video, so I already did some PowerPoints, even though I didn't record the video. And so you will find trades from July or August or something like this in the future videos. I'm planning to do at least 3 or maybe 4 videos coming, including this one. Also, I may start probably to do some mindset videos or something really related to not only like trading psychology, but also mindset for life, habits and everything important to stay focused and to stay in the zone or in the right mindset to succeed in trading and in any other endeavor. So let's start today. The subject is how I incorporated SMT divergence, so it is an ICT concept, in my trading. So SMT stands for Smart Money Tool. So what is SMT divergence and how I use it? It is not an indicator, such as RSI or MACD or something you encounter everywhere on YouTube or internet. It is more a price indicator. So a price indicator that you draw by yourself. So it's not automatic. And you use it to forecast any mispricing or divergence between two instruments. So divergence in price, of course. I personally use it as a confluence and not as a main parameter to my strategy. I use the dollar index to see any divergence in price between the dollar and any foreign currency. So at the moment, I'm only trading EURUSD, so I have only two charts I look at. It's the dollar index and EURUSD. So let's take a live example from July 12th. You can see the 1 hour chart. So this is the start of the day on the 12th of July. So simple, on the 1 hour, this is my intermediate term high because we mitigated this imbalance and we broke the structure with displacement, creating another fair value gap. So I'm interested to see the price reaching this fair value gap to sell since we took sell side liquidity. So here we go in the 5-minute chart. You see the sell side liquidity has been taken and we induce people to sell all along there. So I rarely trade before 8. That's why I put the start of the day at 8. And you have the New York Open. We will see how I use it and why it is important in my analysis. But mainly we see the buy side liquidity. So I do not want to sell below this. I wait first for this buy side liquidity to be taken. And then I look for a sell setup. So here you see SMT divergence. Why? Because on the dollar index chart, this low, 4 a.m. low, is not taken. You see, it's not taken at 8, let's say 8:45. It's been protected. Only this low, maybe this one has been taken, but this one is still intact. And on EU, it has been taken. So on EU, it's a high, it's not a low. Okay, this high from 4:30, from 4 a.m., sorry, has been taken on EU. So this is what we call the divergence, SMT divergence. So now that we have this divergence, what should we do? So I use the SMT divergence for entry. So what's important to know is that I'm not looking for this type of divergence everywhere, because maybe you have one there, maybe one there. You may have divergence everywhere, you know, between Euro USD and the dollar. What's important is I start looking for this when some highs or some buy-side liquidity or sell-side liquidity is taken. So when some important liquidity or important highs or lows are taken, I will take a look on the DXY and see if they are also taken or protected. So once we have taken this buy-side liquidity, we are above New York Open, we are inside the 1 hour fair value gap, a little bit higher. So I look for imbalance or shift in market structure, but usually first imbalance, if we have SMT divergence, I enter and the stop loss above, because you see there we didn't go. I would prefer to wait for this imbalance because you know, it broke the last small low, but it didn't go up until there. So I still enter from this first imbalance right there. Okay. And I have a half position there. I had another limit order right there, but it didn't go. It's okay. I'm still in with a good risk. So half a position. And I'm still in the trade. So no FOMO, no fear of missing, no fear of losing, because the risk is controlled. Okay. And you will see me often do this, like take a first position on first fair value gap, and usually there are some percentage left to complete a position above at optimal entry. So the target was this sell side liquidity, where stop loss, most stop losses were, because people would think this is a break of structure. So they will trade all along this range, trying to buy from there, from there, from there, here also, and probably the last one will try to buy from there. So all these are liquidity to target. You see that the 9 London Open, it came back to break even, but I didn't put the trade at break even yet, because I know that London Open, a lot of volume. Generally, there are some manipulation to take people out, either at break even or stop losses or whatever. And that's why I keep my stop above the, for me, it was intermediate term high. So safe. If it goes above this, for me, it invalidates the point. But here, it's okay. We are in the middle range, so some liquidity has to be taken, you know. It's okay. So the price hit my target. Now let's see a backtest trade. Why a backtest? Because some trades look better for educational purpose. So this one, I found it very good for you to understand maybe better how I analyze and use SMT divergence in my trading. So you see 15-minute chart EU, we have taken sell side liquidity, and there's still some buy side that is accumulating. You see many highs. Okay, buy side liquidity sitting there. We open at 8. So our direction is already chosen. So we target the buy side liquidity. We know we would like to buy. Okay, so pretty straightforward. Now let's zoom in 5 minutes. So I will explain the 1 to 3 type of stuff which ICT use, and I like also to use it sometimes because it gives me more confidence, like more scenario, behind my analysis. So first, let's get back to 15 minutes. So the only thing is I know I want to buy, okay? I know the direction, but does it mean that I have to buy right there? No. First, I want people, because this is like some bullish order flow. If you want to buy and you are already in a bullish order flow and close to the highs, I would prefer people to get induced to sell first, okay? Because people are already induced to buy now. Look, you see this range from low to high, it breaks this high. So people are induced to buy right there. This means that I don't want to buy right there. I want to buy below this low. Maybe below this one, but it would be too much of a retracement. So at least below this low. Okay, we have taken this low. So this was the range I was talking about in the 15 minute. We have taken the stop losses. Now I want to wait for a reversal in price, a shift in market structure, to get in for a buy. So still same thing, New York open. So I use it here just if I don't want to explain like everything, but yeah, I use it for a buy. For example, I would like to buy below this New York open, and for a sell, I would like to sell above. So the New York open is like midnight for this one. It's midnight New York open because we are in London session, and midnight in France, it's 6 a.m. Midnight New York is 6 a.m. So you take the open, and which makes an horizontal line, and you would like to buy below and sell above. But we'll talk about this probably in the next video. So here what's interesting is the SMT divergence and the free runs. So the free runs is like 1, 2, 3. Generally, this is a pattern of reversal, free runs, and it reverse, and we change the structure. And what I found that is very powerful is the free runs works very well with the SMT divergence. If you get free runs and an SMT divergence, personally, I feel very confident to take the trade straightforward when I get some imbalance, some shift in market structure in a lower time frame, of course. So here, to be honest, you could use the 5 minute fair value gap. I think it even hit this fair value gap. But let's say you use this one, okay? You could do like a Fibonacci 50%, and you enter at 50 inside this fair value gap, stop loss below. But it makes a pretty big stop. Personally, I entered before. So this is the scenario. We first accumulate buys, okay? Buyers are induced to buy inside this range. Then boom, we manipulate, and what we look for is to buy during the manipulation. I mean, after the manipulation has happened. Sorry. So here the manipulation has happened. We have free runs, SMT divergence. People are induced to sell, and our target is right there. You could take profit above there already, but yeah, the main target is right there. Now, the SMT divergence is there. Here we have a higher high, but here, this high does not make a higher high. So this high is protected, while on the EU, this low is taken. Okay, this is what makes the divergence. So I'm following the dollar index. If the dollar index, this low is protected, or the high on the dollar, then on the EU, it should be the same. Okay, but it is not, so I'm trusting the dollar index. Now I'm trying to find an entry on the 1 minute, okay? So this is a divergence. We made a new low, shift in market structure, imbalance, fair value gap. I enter right away from there. And we aim for the target. So you could still enter from this fair value gap, because this one, very important, it creates displacement, and we take this important structure. Okay, we come back later, and yeah, you could take the trade right there. So let's see where it goes then. After we have taken the trade, of course, we have taken this buy side liquidity, and it even goes until this unmitigated order block, which is liquidity also. So this is it. 1, 2, 3, accumulation, manipulation, distribution. We distribute the orders above this buy side liquidity. Now, quick example of the SMT divergence and free runs, of how powerful it is. So you must remember from my past videos that I was trading in this, I was involved in this move. But back then I didn't use the SMT divergence. I knew about the free runs, so 1, 2, 3, but I didn't know about the SMT divergence. So you have a sell side liquidity which is not taken yet, and the free runs plus the SMT divergence. While on the dollar index, we already have taken this liquidity. So this corresponds to the sell side liquidity on EU, okay? So this is already taken, and EU, which has made the free highs, so DXY should make free lows, lower lows. It doesn't. This low is still protected, okay? So this high on the DXY is protected. So we have a divergence, free runs. And so the opportunity is clear. You go on a lower time frame, and you look for an entry after the third high is made on EU. So you see, we have another use of divergence. It's not only about the entry, it's also about what important highs or lows is taken, or sell-side liquidity, buy-side liquidity. You see, this liquidity on the DXY is taken from days or weeks ago. It's taken from there. And look how many days we have after, before the move complete, before this move happens. Look how many days. So on the DXY, this week should, on the DXY, it came below. On EU, it didn't. But this can help you knowing that even though this low did not make a new low and did not take the sell side liquidity, this low is also liquidity. So in this way, you know this is not like a reversal or whatever. You know that EU is still aiming for downside. It's just not this day. So it's maybe a week or two after. So this is like a good indicator of where not to trade also. So you are not looking, I mean, of course, on lower time frame, you could buy from there, maybe there, whatever. But you know, on the long term, you are not looking to buy and to put your stop loss below, okay? So this is the other use also of the mispricing divergence between the two instruments. Now I will take another live example also to explain. So this was on the July 20. 15 minutes, the scenario. So we have taken this buy-side liquidity, okay? Now we are targeting this sell-side liquidity. And we have a beautiful 15-minute fair value gap to trade inside after taking this sell-side, breaking these lows, and creating displacement. Nice fair value gap. So now you may ask yourself or ask me, why would I would like to sell since we made a break of structure, and most people probably are looking for a sell also, maybe. And on the left, we have buy-side liquidity, which will be taken some days after. So here, my reasoning is I would like to buy to take this buy-side liquidity on the left. However, I don't want to buy from anywhere, you know. I don't want to buy inside this range or inside this manipulating range or this accumulation, call it what you want. I want to buy from a discount area, this one, because this high has been taken very impulsively, creating displacement and imbalance, and I would like to buy at least, at the very least, right there, okay, on this line. So it could retrace more or whatever, but I'm not interested to buy anything above this. Knowing this, I know I want to sell in the other direction. That's the only thing I can do until the price comes here. So here you see this sell side liquidity. It's a 5-minute wick. So you cannot see here in the 15, but it's a 5-minute wick, I think, which forms the sell side liquidity. So here we go in the 1 minute, pretty quick analysis. We have the 3 runs, okay, first run, second run, 3 runs. And we have a divergence between the second and the third run. So in the 1 minute, I'm not sure, I did not take the DXY screenshot, but you can verify if you want. On July 20, 11:30 Paris time. You see this price action. We create displacement, fair value, very nice fair value gap. I traded right into this fair value gap. So I did not wait for this one. Okay. This one is optimal, of course, but for me, this one is enough. I can enter right there, stop loss above, and aiming for the sell side liquidity and also the zone, the discount area. So this was a live trade. And I remember I was working at the restaurant. So my TP was set here, I think at 1.0202, so 0.05 pip above, 0.5 pip, sorry, above this area, just to make sure that the spread does not, in case, you know, it just ping and goes up, we never know. So it hits my TP while I was working, and this is a discount area. So after then, you could look for a buy, probably. I don't know. I didn't analyze right after. So for transparency matters, I took this screenshot from my FTMO history, trade history, because since my I did a withdrawal on this trading account. So this trading account is now gone. I have a new one. So I didn't come back to the account before to take the screenshots of the IC market terminal. So I took it right from my FTMO history. So you have the trade from the 12th of July. Like I told you, it was half risk. So half risk, half reward. So 0.5%. And this is the one from the last trade, so on July 20. TP 1.0202, a little bit more than 1%. So that's it. And conclusion on this lecture. So SMT divergence is a powerful indicator which can make you more confident while entering a trade, but only if you have a solid strategy. Because this concept can be very addictive, and it can make you rely only on this, while this should be only a confluence to your analysis. I'm going to explain, because I tell you this from experience. When I first traded this concept, of course I had many wins, like 1, 2, 3 wins in a row, and then I tried to over rely on like I was trading almost only this indicator and forgetting all other parameters of my strategy, and tried to scalp every divergence and etc. And of course it ended up in multiple losses. So that's why I warn you to use this with moderation, and really to add this as a confluence for your strategy, like I did in this video. Like I use the SMT divergence not as a main parameter, but as an entry confluence for my strategy. You see that every time I share with you an analysis or a trade that I took, there is all the scenario and the direction and all this, which is a lot more important than the entry with the free runs and whatever. So also it can help you avoid trading above or below certain low or high, or like we saw with the buy side and sell side liquidity on EU. But yeah, like any other concept, when you first try it, it feels like magic, and then if you over rely on it, you will obviously take some stops. So yeah, you have SMT divergence, you wait for shift in market structure, and you enter. This is like the model. This is how I use SMT divergence in my trading. So thanks for watching, as always. And thank you for all the support that I get, all the comments and all the love. I'm very grateful to have this skill and to be able to share it with you for free. I hope that some of you that followed me for now maybe more than a month, I hope that I helped you to get more consistent or give you a better view of the market. I'm very happy if it's the case. So that's my aim by doing these videos. It's really to help you. Like I wish I had a few years ago, free videos to help me in my edge. Back then, there was not many like very insightful content, but thanks to ICT and his videos, I think he has really made an impact over maybe not millions, but thousands of traders by giving his knowledge for free, like he did for me. And I'm gonna repeat it, but yeah, his videos, his 2022 mentorship really helped me. Like it gave me like the last piece I needed to become consistent. I knew I was not far from getting consistent this year, but yeah, when I saw his model with the fair value gap, it really helped me get to this level that I wish everyone will get soon or has already got from his video or from my video or whatever. So as always, comments are very welcome, and sharing also the videos with your friends, traders friend, so you can help them being consistent too. As I believe, since I'm a little kid, I believe that the more you give, the more you get, and whatever you send comes back. Okay. So also you have some useful link as always. You can go over my website and on the motivational reading section, there are some very good, almost all articles. It's not because I wrote them that I found them good, but even myself, from time to time, I go back to my blog and reread some articles to stay on track and to remember some very important keys to the mindset and to evolving, growing spiritually, intellectually, physically, and all that. So like I said in the beginning of the video, I'm probably going to do some of this mindset stuff on YouTube. And but yeah, you have a very strong basis on my blog section, motivational reading. I really recommend you to read some articles in there. because they are the sum of 3 or 4 years, even more, of my personal work and development, and I give everything for free, like all the knowledge, all the value. I try to make it easy and simple to read. Like, I have read many books on self-development and spiritual development, whatever. And in those articles, I try to really get into the point and make people gain time, you know. So instead of reading a 300 pages book, you will get an article of 1 page or 2, which will get the essence of the books, or, you know, try to simplify it and make it my way. And you know, there are many authors which tell the same thing, but even though it's the same content, the same law, for example, if you are looking for the law of attraction or something like this, there are thousands of books for this, but some authors, you will understand, the words will touch you more deeply, and you will understand more from someone than from other authors. I don't know if you understand what I mean by this. And I think it's the same for YouTube. ICT has his way of teaching, and some people will teach the same thing as he does, but they will tell it a different manner, and you will understand it better than from ICT himself. Even though I think, you know, always recommend to watch him, even though his videos are very long and etc. It's still good to see the source of all this material, you know. Just at least for being grateful for this, you know, for making him like an honor or whatever. So you will see more videos coming from me soon, and I wish you a good trading week and a trading journey, of course. Be safe, and see you next time.